We're rolling. Welcome to the REI Rookies Podcast, the Real Estate Investing Rookies Podcast, episode number 115, where we invite you to follow us on our journey towards financial freedom using the power of real estate. I'm Josh Koth, and Jack Haas is off doing 4 hours of sheetrock in 8 hours' time. Here at REI Rookies, we believe in a couple key principles. Number one, the best way to retain information is by teaching it to others. And number two, a rising tide lifts all boats. We're not competitors, we're a community. So let's get into some real estate investing. All right, guys, I said Jack's doing some manual labor again, hanging some sheetrock, and he is. But he was also in the studio earlier and interviewed Jack Gibson of High Return Real Estate. We had his partner on earlier this year, and Jack Gibson returns for a chat about the Indianapolis market and real estate investing in general. Let's check out that interview right now.
So we have Jack Gibson on the line. And Jack, I kind of gave a brief introduction to you, but can you give us a little bit of your background? It's always great to hear it directly from you.
Yeah, absolutely. Thanks for having me, Jack. It's a pleasure to be on your show. And I got actually started in business back when I was 19. My parents were amazing, in terms of just the support and love and how they raised me. And always for them, though, it was about more so getting success in school and then using that to kind of get yourself, land yourself a job and then work your way into a, job type career path. And my heart was always as an entrepreneur. I had watched my uncle. He had built 3 successful businesses, successful farmer, successful insurance. He had a tent, table, and chair rental business, and all 3 were very profitable. And I learned a lot, just watching him over the years. He didn't have any children of his own, so I kind of filled in, in that regards as well. So I definitely, I knew that entrepreneurialism was always on my heart. I just didn't know when in my life that would actually happen. While I was sitting in my dorm, another college student was passing out flyers about a nutrition product, and then that led into us having a conversation about, enrolling as a distributor, as a sales rep. So I did that part-time while I was going to college and was able to build that up. Had a rough start. I mean, not a lot of times, business, it just takes time to find your way. First year was rough, but then caught my wind, so to speak. And then it took off. And by my senior year, I had $1 million business, making more money than my college professors. And I decided to go into that full time. So that's been my full-time career. But it's just been steadily growing that business for the last 20 years. And it was about 3 years ago, we were really starting, we had finally, we bought our dream home that we had saved up for. And, we were in a very good financial position. Cash flow was strong. And I knew there was I really needed to start learning how to be a successful, sophisticated investor, as Robert Kiyosaki says. I felt up until that point, I was just kind of, just going about it at the way that everybody else did. Turn your money over to somebody else, a stockbroker or whatever, financial planner, let them make all the decisions for you. And I knew, I knew in my heart that wasn't the way to go to ultimately create wealth. And what everything he said about that process made sense to me, that you're putting your future in somebody else's hands that doesn't care as much about your future as you do. So I knew that I needed to learn. So real estate to me was something that I always knew I wanted to do, but I didn't know how to go about doing it. So I just learned, dove in, listened to podcasts like yours, I downloaded 100 different podcast episodes and did that every day for an hour while I was going to the gym. And then I'm like, okay, I've learned quite a bit, but I know I have still a ton to learn, but I need to start taking action. So I started buying up property, and that's when I bought some turnkey properties. And then, long story short, I started referring friends, family, colleagues, and soon realized I had a business. And that's right when I brought Shecky in to help me with the digital marketing component of that, and turned it into now, we did over 100 fix and flips last year for investors. And our company, High Return Real Estate, is slowly becoming one of the, top national brands in the turnkey space. So we're excited about what's happening and very optimistic.
Yeah, Shecky and I had a great conversation, and everybody should check that episode out when you get a chance. But what you really brought up here is that I think it's a mindset thing that we really need to touch on. And you brought up Robert Kiyosaki, and one of those books that kind of got me into things is, everybody talks about Rich Dad, Poor Dad, but one of those things that really sunk the hook in for me was the cash flow quadrant and making that linear income versus passive income. How did you make that jump? I mean, I know that the nutrition world, you're probably building up a business there. Making that mindset, that shift there must have been pretty significant.
Well, the fortunate thing about where I was with the nutrition business is that was a very passive income business. It's a multi-level marketing. So you've got a lot of the components of the mindset built into that style of business that you do with creating passive income through real estate. So the mind shift wasn't the difficult part. The difficult part was really finding the time and the energy and carving that out to learn a different space. And without having that kind of knowledge and whatnot, I mean, you can definitely make some very serious and costly mistakes. And the main thing too, I'd say the difference between the two businesses is that the real estate is much, much more capital intensive than, the other business is very no capital. Actually, it's just more, labor, and I wouldn't say even labor. I'd just say more so people at work versus money at work, so to speak. So the big, thing for me was like just shifting away from, okay, I'm going to take, my money and just give it to somebody else and put it into the stock market like what everybody else does. And then really just say, okay, enough is enough of that. I'm going to actually start learning and applying and building up a real estate business. And it does take a lot of effort. It does take a lot of time to be able to, really figure out how to do it the right way for what you're trying to do, what you're trying to build. I was trying to build a secondary source of passive income as a backup so that I didn't ever have to put my family in a precarious position where we might, lose some of our lifestyle that we've been accustomed to.
Right.
So for me, it was all about, just more of protecting what we've already built.
Yeah, that's kind of what caused me to get into the real estate thing too, is protecting for the family. The corporate job just didn't seem, when you take a moment, it's not as secure as you might believe it is.
Yeah. I've seen many friends that have thought they had a successful corporate job and, or even acquaintances that then it found out that it wasn't so secure as they thought. So, and, they can usually land on their feet and find something else, but you've got a stoppage of income in that period of time. And you may be taking another job that you're not crazy about, but you just need to take something to be able to fill in the income gap. Sure. So by having a backup passive income in place, you have yourself the ability to maybe bide yourself some time. So you don't have to jump at something that you don't want to do. You can go into something that you're really, truly passionate and that you really enjoy versus just getting something because you need to, make some money.
Sure. So, with all of the real estate avenues that are available to us, whether it's buy and hold, I know that you and Shecky do the turnkey. Turnkey is a big aspect of what you do. What makes you like fix and flipping? Let's go down that rabbit hole. With HGTV and everything that's going on right now, everybody thinks you can fix and flip within 30 minutes or less. Tell me a little bit about what caused you to focus on the passive income side of things.
So the way I look at it, as far as what we're doing, like the goal of high return real estate, we are fix and flipping. It's quite a different type of fix and flipping than, what you would traditionally do to like a retail buyer. So to differentiate the two, right? Like when you do a fix and flip on the retail side, those are typically much more for our like market and to really make those work. I mean, those are the ones I've done are $200,000, $300,000, $400,000 houses, right? So you're putting a lot more capital into those. And, the three that I've done that way, they definitely have not gone anywhere even close to how it went down on HDTV. Like just to give you an example, one of them took 18 months. Well, all the holding costs of the capital tied up into that project. I mean, by the time we closed, and we just closed on it 2 weeks ago.
Mm-hmm.
So what it would appear to be a really nice profit was actually all eaten up by holding costs.
Right.
The cost of capital, it has a cost, right? Whether you're borrowing from somebody else or if it's your own money, it's got opportunity cost attached to it, where you could be deploying that and making, maybe rent somewhere. The taxes, insurance, right? Those are all holding costs. So that was one. And then another one, I thought when I bought the property, we fixed up a dilapidated house in an area that's really gentrifying. Well, I mean, that one is now well over a year, and I still don't have it sold, don't have an offer, and I don't even have the lot next door to it that I need in order for the buyer to be able to park right there on their own property. So that whole lot is tied up in a estate that there's 4 people on it and 3 of them are dead. So now we got to track down the one who is. It's just a mess. I won't go into that.
Yeah, no.
So that's just not been my experience that they're smooth. Now on the the way we fix and flip for investors, I mean, we've started to get that dialed in because we're not taking on the ones that need $40,000 worth of work. We're taking on things that are 5, 10, 15,000 where you don't run into quite so many challenges. And the investors, they're not buying a property as they are buying a stream of income. So our buyers are more concerned with what's the ROI of the property versus what does the house look like, what's the paint, what's the color scheme, all of that. It's just a totally different buyer.
Right.
So I enjoy that, working with that type of buyer much more so than the retail investor or the retail buyer, I should say.
Yeah, no, I can echo what you're saying. We've never had a fix and flip that has gone exactly the way you plan it.
Yeah.
There's always something.
Yeah, so many variables.
Yeah. One of the things that I thought was really interesting, and maybe this is more common than I realize, but because I haven't bought a ton of turnkey properties myself, but I have done a couple. You come from the approach that when you buy a turnkey yourself, or you buy a property and you designate it ready for turnkey and you fix and flip it to an investor, you kind of go through the whole process to the point where, a lot of turnkey companies that I've seen will have you buy the property, basically hire their contractors to get it renter ready. You're putting up money in stages. Versus you really hand over a completed, like almost to the point of already having a tenant in it, right?
Yes. We've done it that way before, where we would sell it before it was done. That problem with that is the stress load, and also the problem with that is forecasting the rehab costs.
Right.
So when we were selling them before they were done, we're saying, well, we think this will take 3 months and, we're going to sell it to you at this price because we've got it scoped for this amount. So we know we have this much margin in. Well, what happens when the rehab goes 5,000, 10,000 over budget? Now our profit is basically wiped away. And we did all this work and all this stress and pressure to get this project done. And it turned out like we were wrong in our numbers. But yet we had an agreement with the turnkey buyer at a certain price. So we're going to honor that. We're going to honor our word.
Right.
So that was the challenge with that model for us, is that, construction can take longer than you think. Placing a tenant doesn't always happen right away. And then the investors getting anxious. So we just said, you know what? Let's take all of that out of the equation. Let's acquire more capital. So we brought in some additional partners to put up more, cash, so we could buy more property and put them through that process to have more, properties that are turning out and spinning out the other end of it. And since we've gone to that, and we just said, you know what? Well, we're never going to compromise this model again. And we've been so much more successful, and everybody's happier. We're happier. Investors are happier. everybody's, everybody's much more relaxed, and they know when they're buying it that they're right out of the gate what they're getting.
Sure. It's just such a relieving aspect of it as a person who would be buying it. You just know what you're going to end up with. I mean, it just makes a lot more sense, but it seems unique to me, but maybe it's not.
Yeah, I mean, our investors can get, see 2 inspection reports now at this stage in our game, where they can see, what happened, where was the property at when we acquired it, and then they can see a third-party inspection at, when we were finished with the rehab. And of course, you rarely, I mean, the third-party inspectors, their job is to pick the property apart, right? And that's what we want them to do, and keep our crews honest. But, we do at the end of the second inspection, right, the final one, it's never really final because they'll always find something. And then we go back, we take care of that. And then we deliver a really high quality product that's got a tenant in place.
Right. That was one of those things that Shecky had brought up that I thought was interesting. And we've started to do that here locally is before we will list a property for sale, we'll sometimes send an inspector through just to make sure we didn't miss anything.
Yeah, I think that's smart. I would say trust but verify. And that's the mistakes we've made that have really cost us with previous partners in the past. And we bought and trusted them to do what they said they would do, but then we didn't verify it. And so that trust was ill-placed, and it ended up costing us quite a bit because we had to go back over a lot of our properties for our investors just because the guys didn't do what they said they were going to do that we contracted with. So yeah, it's trust but verify. Those are timeless words of wisdom. Yeah,
and I wish I would have followed that on a couple situations too.
Yeah, I bet.
So when with you being a turnkey provider, do you have any suggestions or questions a person should ask if somebody's thinking about doing long distance investing or buying a first turnkey? What should they be asking their turnkey provider?
Well, I think that there's two parts to buying turnkey, right? There's number one is what's the condition of the property? Mm-hmm. What's the quality of the property? What kind of maybe short-term or long-term CapEx expenditures are you going to be looking at? So short-term, we've alleviated that for our investors by providing a 6-month warranty that we warranty all the major systems so that if anything does go wrong, and typically things go wrong when the tenant first moves in and starts, banging on the property, that's when we start to see what the property is made of, right? Mm-hmm. So we cover all those major things, even minor things, honestly.
Right.
And then long-term CapEx, we try to alleviate by providing the 2 third-party inspections so they can see where are the major components in terms of, functionality and condition when they buy it. So that's one part of it. The second part to it is the team behind the property, which my experience buying in different markets, the team I think is the most important part, because that's who you're relying upon as a long distance investor to solve the problems that are going to come up on your property and handle your account in a professional and looking out for your best interests. So we approach it with our investor base we want a long-term relationship above everything else. So if we have to eat some costs to keep our investors happy, we're going to do that because we want to preserve the relationship over the transaction. Mm-hmm. So I think what I found in real estate, honestly, to me, it appears like it's a much more dog-eat-dog world than what I'm accustomed to in the nutrition space. Like that, I don't need a lawyer in that business. Yeah. In this one, I need one every week almost, just because it's much tougher. I feel like, much more place for just bad people to be in. I don't know. So you just you do have to be careful who you're doing business with, especially because in real estate, you're doing much larger transactions. Mm-hmm. And there are a lot of great, there's a ton of great people out there, but there's what I found is there's some real tough people as well that you got to navigate around.
Yeah. No, we host the local real estate meetups here in our area, and it's great to be in a community of like-minded individuals. But you always run into one or two of those people that they almost want to pull you down versus pulling you up. So
Yeah.
you have that situation in a lot of industries, I guess.
And I think it's really boils down to their mindset is folks focused on transactional thinking versus, long-term, prosperous, mutually beneficial relationships that could last, 5, 10, 15, 20 years or more. And that's the way I've always approached businesses. I'm not out for a transaction because transactions, at the end of the day, they're short-lived. That's not how you build wealth.
Right.
How you build wealth is creating long-term, sustainable business that, people can feel comfortable referring their friends, family, neighbors, and mom to you, and know that that you will take care of them and have their best interest at heart. Right.
I always think it's such a shame that they don't have that abundance mindset. It's if I'm trying not to be in a situation where I'm in competition with anybody. And, it'll always come around eventually.
Yeah, I agree with that. We'll host people on our show that could be quote unquote, our competitors on our podcast. And, the way that Shecky and I kind of look at it is like, look, the universe is abundant. We're abundant. We can generate, plenty of business. And, we just want to do our best to serve our audience. And if they end up, we, turn them on to somebody else, hey, you know what? That's okay. There's plenty of business for all of us.
Right. And if it's, everybody has preferences. So if we're not a good fit, somebody else might be.
Yeah, that's exactly. One thing I wanted to just throw in, I was on a tangent, then kind of threw off it, but the reason why I do flipping, whether it be the retail flips or if I do the, the turnkey, shorter flips, is really just to generate cash so I can reinvest in creating long-term buy and hold passive income. So to me, it's just an extra way to create income faster. The time value of money is amplified with the flipping to be able to then, buy more, long-term rentals. So my entire model and goal is not to create short-term revenue through flipping. It's to create capital to create long-term, passive income. And that's really truly where lifestyle is created. I'm all about lifestyle. I want to design and create an extraordinary life, but in able to do that, the key word in that is design in all caps, design an extraordinary life. So in order to do that in today's marketplace, in today's economy, in the new age economy, you have to have passive income to be able to do that, in my opinion. It's just a non-negotiable. You got to figure out how to do it.
So, since you're backing up a little bit, I have to go back to something that you earlier said too. You had a unique situation where it sounds like you came from a family that was very entrepreneurial, and you started off at a very young age with that mindset. How have you instilled this spirit, or how can we instill this spirit in our children?
Well, I think just my kids watching me and they listen to my conversations, I have to make sure when my kids are 9 and 11. So I have to make sure that whenever I have somebody, on the phone, I'll put them on speaker in my car and then I'll tell them, look, my kids are in the car. So watch your language, because they're going to pick up on some, vocabulary that I'm not so keen on them getting quite yet.
Right.
So, just trying to get them integrated. I've taken my oldest son, John, to my properties. I give them, I play Monopoly with them. I play Cash Flow, the board game with them, both the kids version and the junior version and the adult version. And I think games are an amazing way to teach kids, because it's a fun, interactive way for them to learn. So we just try to, get them and hit them in different ways so that they start kind of like getting it through just like what we do and how we live our lives and how we think. Look, I mean, it's very difficult to instill a entrepreneurial type of mindset into your kids if you don't have it yourself. And if that's not the way you're living, I mean, it's just, they're going to kind of learn just by what you do. So you could be saying one thing, but if you're doing another, I don't really think, honestly, that's the way to teach.
Right. No, that's a very good point. And one of those things that I've personally struggled with is just constantly trying to stay in that mindset myself. And I've been, whether I'm listening to audiobooks or podcasts, it actually drives them a little crazy. And our listeners have probably heard me say this more than once, but they almost to the point where they get a little annoyed because I'm walking around the house with a podcast or an audiobook playing all the time. What do you do to keep your mindset going like the way you do? Because it just talking to you, it's obvious that you have a gusto associated with mindset and keeping things going in that way. And that positive thinking can sometimes be a task in itself.
Yeah, I read quite a bit. I mean, I love, books on business and personal development. I like podcasts. So, I try to listen to podcasts all the time, like if I'm at the gym or, if I'm in the car. I mean, I try to turn those moments of maybe lack of productivity into, productive learning time. So there's, if you look at, Brian Tracy said, look at how many hours, it's like thousands of hours that you're in your car throughout a year. Mm-hmm. If you just took that time and, even 50% of the time, if you just listen to educational programming, you could become an expert in your field and you could totally change your entire life around. Mm-hmm. So turning your car, turning your gym time where you're working out, fueling your body, plus you're fueling your mind at the same time. I mean, man, that's a key to me. That's a way to create a very successful life.
Since you were in the nutrition side of things there, like how much of an impact do you feel is your nutrition and your exercise and everything like that? How does that impact your mindset?
Well, I think huge. I mean, look, if your body is not, in great shape, I mean, it definitely, we know statistically, studies, experts, they all say you definitely don't have the energy and the mental concentration and focus. That ability is, dropped down significantly in terms of what you're really able to do in terms of your peak potential if you do have a fit body. So I think it makes, for me, it's a non-negotiable. I have to do that so that I can actually be able to, put the most 100% of me into my businesses and into my family. So yeah, it's I think it's kind of foundational. It's where it all begins.
Sure. Yeah. It's becoming, I've been struggling to try to stay on the way I eat and that's always a thing, right? But
yeah, I mean, it's not easy. It's not easy.
I've definitely can tell, like when I'm set, within a week or two, your mental clarity, everything dials in so much better.
Yeah, I mean, to me, there's two keys to being able to eat right. Number one is meal replacement technology. I mean, they've got it today where you can get an extremely healthy, nutritious meal, and you can make it in 2 or 3 minutes. Mm-hmm. In a meal replacement shake. So that I'm huge on that. I have a couple of those a day, and then meal prepping. I've got, if you meal prep and you have all your meals, most of your meals set aside for the week already made, mm-hmm. then it makes it so much easier because it's right there. It's done. So I actually hired out meal prepping service, and that way, like, I'm not worried about that part of my life. I just reach into the fridge, grab a container, and boom, heat it up, and I'm got a really quick, healthy meal. So for me, it's all about convenience and making sure that everything is quick and convenient.
Well, I bet you didn't expect us to go down the right, nutrition.
I could do another 30-minute podcast. Probably tell.
So, we're probably coming up on 30 minutes here, but I always usually end or try to end the show with a couple last questions. Can you give me examples, or what was your best investment and your worst?
Like it's from like a particular property, or?
Yeah, if you had any examples. We talked about the fix and flips. They never go as expected, but have you had any that like really stand out as like, wow, I'm glad I was in the right place at the right time, and that turned out to be a great investment?
Yeah, so I'd have to say the best investment, honestly, that I made, I know this is going to sound, I don't know if it's how this is going to come across, but the very best investment I made was giving up 50% of my company to bring Shecky in.
Oh, that's awesome.
I had 100%, obviously, of everything I was selling when I was first starting to sell Turnkey, right?
Mm-hmm.
So I meet Shecky as my digital marketing coach in my nutrition business, and I offered him 50% equity to form, a company together. In effect, I was giving up 50% of all the business that we were going to make.
Right.
But my 50% is much better than 100% of a smaller pie, because it's 50% of a pie that's, 4 or 5, it'll be 10 times bigger than what I could have done myself.
Mm-hmm.
So that was absolutely the best investment that I've ever made, because I brought in a great partner that complemented me in terms of his skill set versus mine.
Mm-hmm. Yeah, that's awesome. I mean, I haven't gotten that type of response before, and it does echo some of the things that we talk about, especially in some of our meetups. I mean, it's amazing how many people will hold on to something and frankly would rather lose it than partner on it.
Yeah. I've made some big money on some large package deals. I made $100,000 on a couple
Mm-hmm.
of times. So that was, buying a package and then flipping a lot of, several properties together.
Right.
And that to me, that pales in comparison of what the move that I made with, investing into a partner.
Right.
Pales. Because I think the two biggest returns that you're ever going to get is when you invest into, number one, yourself.
Mm-hmm.
And then when you invest into other people.
Sure. So, okay. Now on the flip side, what was one of your worst investments you've made?
The worst investments I've ever made there was a Turnkey, my original Turnkey provider. I bought properties where I didn't, I trusted, but didn't verify.
Mm-hmm.
And turned out that the thing was pretty much a Ponzi. I was getting fake rent, and the quality of the properties was pretty terrible.
Mm-hmm.
So I ended up having to, once we got it all straight and figured out, I had to put, a lot of money back into these properties that I wasn't anticipating. So pretty much devoured all the rents and then some that I had accrued.
Right.
And, but at the end of the day, I look at it as a learning experience that it was like a Harvard business degree, that I'm going to take that negative experience and I'm going to turn it into something great over the next 5 years.
Sure. No, that's a great attitude. I've seen a lot of people react very differently when similar situations.
Yeah. And I understand, especially, when you're talking about people that maybe invested retirement funds, that's going to be hard for them to be able to recoup. So for them, my heart goes out, but I certainly have the ability to replicate more money. So at the end of the day, I'll be okay and just learn from it and move on. I think most people listening, they could probably say the same thing. When you experience any type of loss, you can learn from it, not take on the woe is me mentality, and make yourself stronger and better, and your future will be even brighter.
Right. So I always ask for book recommendations. Like if people were getting into real estate investing for the first time, what would you recommend? Like what are a couple of your favorite books? Whether it is real estate investing, mindset, just business in general, it can be anything.
So I like the ones you said those are always my top two: Rich Dad Poor Dad and Cash Flow Quadrant.
Right.
I'm not like that big on like reading real estate books. Like I think I kind of get bored, so I'd rather just listen to a podcast.
Sure.
So, but I love the podcast I like is Self-Made Man by I'm sorry, it was Self-Made Man. He changed it to the Mike Dillard Show.
Sure.
And he talks about how to build really large scale companies, brings on people from all different industries, and then. Yeah, those are definitely my favorite. I love Think and Grow Rich too. That's a classic by Napoleon Hill. It's one of my all-time favorite books.
Yeah, that's great. And then we have to make sure we plug your podcast. Where can they find that?
It's called the High Return Real Estate Show. And you can go right to our website, www.highreturnrealestate.com, and you can subscribe to it right there. It's also, I think it's iTunes, Stitcher, all those major networks are starting to pick us up. We're about, I think, 60 episodes in, and it's really focused on buy and hold investors. But we also pull in people from, all different, walks of real estate.
Sure. Is there anything else you like? Where else can they find you? If anybody has any questions, where can they find you directly?
Our website is absolutely the best way to go because it's kind of like our all-in-one ecosystem. Mm-hmm. And if they're interested in, learning more about what we do, we have a awesome investor relations, Nicole Haas, she was actually one of my very first investors. And I just loved her personality. Everybody who talks to Nicole, they say the same thing. I love her. Mm-hmm. So she's fantastic, and she could help people understand more about our model and turn them onto any potential properties if they're interested in, doing business with us.
So, well, I can't thank you enough for being on the show, Jack. This was great. I don't get very many options to talk to another Jack. Like we chatted. We chatted regarding that, but I will make sure to include all of those resources and links in the show notes. So please head over to reirookies.com for that information. But thanks again for being on the show, Jack.
Pleasure, Jack. Thanks so much. I enjoyed the interview so much. Thank you.
Yeah, you bet. Talk to you soon.
All right, thanks to Jack for interviewing Jack Gibson of High Return Real Estate, and thanks to Jack for being on the show. And we've put a lot of effort into providing useful content, and if you found value in the show and have any interest in supporting us, we'd love a small donation. Head over to patreon.com/REIRookies. And if you have any thoughts or questions, shoot us an email at info@reirookies.com. You can find us on Facebook, Instagram, and Twitter at REIRookies. And if you like what you're hearing, head over to iTunes. Subscribe, rate, and review the podcast. It really helps other rookie investors out there find the show. And remember, get off the bench and get into the game. We'll see you next time. This episode is brought to you by FargoTurnkey.com. Do you live in a good cash flowing market? If so, Turnkey isn't the best choice for you. You should buy in your market. If you don't live in a great market for investors, where can you find profitable cash flowing properties? We love the Midwest, where prices are reasonable and the people are great. Ever heard of North Dakota Nice or see the movie Fargo? That's where we live. We personally invest here and have lived here all of our lives. How does Turnkey work? We find the property, we rehab the property, we find you a tenant and place you under the care of our local property manager, who we trust with all our own investment properties. I'm sure you have questions about how the process works and what to do next. If that's the case, fill out the form on FargoTurnkey.com and we'll reach out to see if you are a good fit for our business. We have a limited supply of properties every month, so we can sell only to a few qualified buyers. See you at FargoTurnkey.com.
I don't like to tell a man what to do with his money, but if you ain't investing in property, then you're dumber than a dummy.
I'm not dumb. I'm smart.
Well, buy property. That's my advice.